And if I told you there's a completely legal way to live like the rich without paying rich-level taxes, I'm not talking about loopholes, tax havens, or secret accounts on faraway islands. I'm talking about something that's been right in front of us for over 100 years and almost no one understands it. This happened. The rich stopped selling off their assets, but then something much more significant occurred. They realized that the global financial architecture has a massive structural blind spot. Right now, there are billionaires actively pulling $40 million in liquid cash out of the banking system to fund their luxury lifestyles, and they are legally paying exactly 0% in income taxes to the IRS. You look at your paycheck and see 30% extracted instantly, while the elite buy mega yachts and private jets completely tax-free. This is not a glitch in the matrix. It is the matrix functioning exactly as designed. The tax code was never engineered to extract wealth from the people who own the world. It was engineered to extract liquidity from the people who work for a living. In the next few minutes, I'm going to expose the exact three-step legal framework the elite used to erase their tax liability. It is called the buy, borrow, die strategy. I will show you why your salary is a mathematical trap, why the wealthy view massive debt as a tax-free shield, and how they use a hidden mechanism to wipe their tax history completely clean for the next generation. Pause and write this down right now. The system punishes the earner, and it relentlessly rewards the owner. Let us dismantle the illusion, the fatal trap of earned income. To understand how the elite escape the system, you must first understand the cage you are living in. The biggest lie the middle class believes is that taxes are applied equally to all money. You are taught that the more money you make, the more taxes you pay, but the system only applies that brutal logic to one highly specific type of money, earned income. When you trade your finite time and physical energy for a salary, you generate earned income. In the eyes of the government, earned income is the absolute lowest, most heavily punished tier of wealth generation. The moment your employer hits send on your direct deposit, the government intercepts it. You do not even get the choice of how to spend it first. You are taxed at the highest possible brackets, bleeding 30 to 40% of your labor before it ever reaches your bank account. You are a battery powering the machine. The elite look at a salary and see financial suicide. They absolutely refuse to generate taxable earned income. Instead, they shift to a completely different psychological and mathematical paradigm. They execute step one of the framework: buy. The wealthy do not accumulate cash. They despise cash because inflation rots it away. They buy assets. They acquire commercial real estate, index funds, and equity in private businesses. Assets are fundamentally different from a salary because of one massive foundational loophole in the global tax code. The government does not tax unrealized wealth. The system only taxes transactions, not possession. Let me explain the math. If you buy a commercial building for $2 million and 5 years later the market value explodes to $10 million, your net worth just increased by $8 million. You are $8 million richer, but because you have not sold the building, you have generated exactly $0 in taxable income. You are invisible to the tax collector. You are legally broke on paper while your wealth compounds aggressively in reality. Your assets multiply without triggering a single tax event. This is the first psychological shift. You must stop chasing taxable income and start obsessing over acquiring appreciating assets. But this creates a very practical problem, a problem that traps most intelligent people. If all your wealth is locked inside a commercial building or a massive stock portfolio, how do you actually buy the yacht? How do you fund the luxury lifestyle, pay for the private schools, and travel the world? You sell. They leverage. When a normal person needs liquid cash, they do the only thing they know how to do. They sell their investments. The moment you hit sell on your stock portfolio or liquidate a property, you trigger a taxable event. The government steps back in, classifies the profit as capital gains, and takes 20% or more of your money. You are brutally punished for trying to access your own wealth. The elite refuse to play this game. They never sell. Selling is for the middle class. Instead, the wealthy execute step 2 of the framework: borrow. This is the psychological barrier that keeps educated, hardworking people permanently poor. You were conditioned from childhood to fear debt. You were taught to pay cash for everything, cut up your credit cards, and avoid loans at all costs. That advice is carefully designed for the working class to keep them compliant. For the wealthy, debt is not a liability. Debt is a weapon. Debt is a tax-free shield. Instead of selling their $10 million real estate portfolio, the wealthy walk into a private bank. They use those assets as collateral, and they take out a massive line of credit. Let's say they borrow $3 million against their properties. Here's the brutal, undeniable truth of the tax code: a loan is not income. Because a loan is technically a liability that must be repaid, the IRS cannot touch it. It is entirely untaxed. You now have $3 million in pure unadulterated liquid cash to spend however you want, and your tax liability on that money is exactly 0%. Rewind this if needed. They borrow the money to live on, completely tax-free. But what about the interest? What about paying the bank back? This is where the mathematical genius of the system reveals itself. The interest rate on a secured loan for a high net worth individual is incredibly low, often around 3 or 4%. But the assets they used as collateral, the real estate and the stocks, are still growing at 7, 8, or 10% a year. The asset growth completely outpaces the cost of the debt. The investments are literally paying for the loan while the total net worth continues to climb. They are spending millions of dollars in cash. They are paying absolutely no taxes, and they are getting richer at the exact same time. The math works perfectly, as long as you never sell the underlying asset, the ultimate generational reset. But you might be thinking, this cannot last forever. Eventually, the wealthy individual has to die. And when they die, they still have a massive mountain of debt attached to their name and a portfolio full of untaxed gains. Surely the system catches them at the end, right? The government will finally step in and take their cut from the estate. Wrong. This is where the final, most ruthless part of the framework activates. Step 3, die. When a wealthy individual passes away, their assets do not vanish. They are transferred to their heirs. Their children inherit the real estate, the stock portfolios, and the art collections. But the tax code has a specific, incredibly powerful loophole engineered specifically for generational wealth. It is called the step-up in basis. Let me explain exactly how this works, because it is the secret engine of modern inequality. Pause and listen closely. If you bought an asset for $1 million and it grew to $50 million by the day you died, there is $49 million of untaxed profit sitting there. If you'd sold it while you were alive, you would have paid tens of millions of dollars in capital gains taxes to the government. But upon death, the step-up in basis legally resets the original purchase value of the asset to its current market value on the day you die. For tax purposes, the government pretends your heirs bought the asset today for $50 million. The entire $49 million of historical profit is completely wiped from the tax record. Poof, gone forever. Your heirs receive a $50 million portfolio with a clean slate. They can now sell a portion of those assets entirely tax-free because, technically, there are no gains yet. They take that untaxed cash, pay off the original bank loan you used to fund your luxury lifestyle for the last 20 years, and they keep the remaining $40-something million completely clear. The cycle is complete. You bought appreciating assets. You lived off tax-free debt for decades, and you died, allowing the legal system to wash away the accumulated taxes for the next generation. The slate is wiped clean, and your children can start the exact same buy, borrow, die cycle all over again. This legal structure is exactly why wealth inequality persists across centuries. It is not an accident. It is an engineered mathematical loop designed to protect capital from the state. Why you are excluded from the game. Now, you might be asking yourself why everyone is not doing this. Why doesn't the average person just use the buy, borrow, die strategy? Because the system requires critical mass to operate. You cannot execute this strategy if you are living paycheck to paycheck. You cannot borrow millions against a checking account that has $400 in it. Banks only lend at favorable rates against hard, appreciating assets. If you do not own assets, you are excluded from the game. This is the ultimate trap of the middle class. You spend your entire life trading time for earned income. You take that heavily taxed income and you buy depreciating liabilities. You finance cars, you buy expensive clothes, and you upgrade your lifestyle every time you get a raise. You accumulate things that lose value, which means you have zero collateral. Without collateral, you cannot access cheap debt. Without cheap debt, you are forced to rely on your salary. And because you rely on your salary, you are permanently trapped in the highest tax brackets. The wealthy play a completely different sport. They aggressively minimize their taxable income. They live like ghosts on paper. Their tax returns make them look middle class, while their balance sheets make them kings. They do not care about a high salary because they know a salary is just a mechanism to feed the government. They care about equity. They care about ownership. This realization should fundamentally shift your entire financial psychology. The anger you feel when you look at your paycheck and see 30% missing is justified. The system is rigged, but being angry about it does not change the math. You can either complain about the rules or you can learn how to play them. You must stop obsessing over taxable income. A raise at your job is nice, but it will never make you free. You must start aggressively accumulating assets that grow without triggering tax events. You must recognize that the modern economy rewards owners and it relentlessly extracts from earners. Every dollar you save and invest into an appreciating asset is a brick in your financial fortress. It is collateral for your future. The goal is to reach a point where your asset base is large enough that you can stop selling your time and start borrowing against your equity. This requires a terrifying level of discipline. It requires you to kill your ego. It requires you to drive a 10-year-old car while you build your portfolio. It requires you to look poor while you quietly become rich. If you found this clinical breakdown valuable and you want to master the exact psychological frameworks that keep the elite wealthy and the masses permanently broke, subscribe to the channel. Stop playing the game they designed for you. Stop funding a system that keeps you trapped. Build your assets, weaponize your equity, and protect your mind. See you in the next protocol.